Yeah, hi everyone. Today's our discussion is all about adjustment of capital accounts in new PSR. That is our discussion. So, what are the things we need to remember when we are writing adjustment of PSR? So, first 3 points you need to remember. The first point, uh, we need to calculate whenever there is the situations as arises in all the cases change in PSR, and you will also get this type of situation: admission, retirement, death as well. In dissolution, there is a no need of this because in the dissolution, all the books of accounts will be closed. So, what are the things we need to keep? We need to keep three steps in the mind. The first step is you need to calculate capital account. You need to do sum as till capital account as usual. Okay. Then you have to take the balancing figures, but you should not write it. You should not calculate balancing figure. How you do balancing figure? Credit minus debit. You will get the balancing figure over here, the capital accounts of the balancing figure of the capital accounts. Then second step we have to do, we need to calculate capital of the firm. So after calculating capital of the firm, what is how to calculate capital of the firm? Adjusted total capital plus cash required to be bought by partner. How you will get cash required? How you will know cash required to be bought by the partner? First, you have to check what is the cash required to run the business. It is given in the question. Minus, you have to check cash available. So, in the cash available, to know the cash available, if it is case of admission, amount in the balance sheet plus amount in the balance sheet and plus you have to take, in case of admission, amount in the balance sheet plus any cash bought by new partner. In case of retirement, balance sheet, cash available in the balance sheet minus you need to do. Minus cash to be paid to retiring or the, the partner. This is in case of admission. This is in case of death and retirement. So if you do this, you will get the, and then you have to go to the step number 3. So in the step number 3, already step number 2 you got total capital of the firm, then you have to distribute in new ratio. Then you need step number 4, you need to compare step number 1 adjusted capital with step number 3 new capital of partners individually, capital of partner, new capital of partner, which means which is distributed in new ratio. Then if there is surplus, which means step 1 is more than step 3, refund. So write on debit side to cash. If it is deficit, which means step 1 is less than step 3, then write on the credit side, then cash to be bought by partner. Then write on the credit side by cash. Okay, so one more step you need to remember. Whatever the balance you get in this step, it should be your by, sorry, that should be your closing balance in the ledger account, capitals account, to balance carried on. Then after completion of all this, your capital account should tally. Your totals of the capital account should be equal. So here the thing comes, here we need to understand how to calculate adjusted capital in different scenarios. So let's go and see that. So the situations where you will get in change in PSR, this situation will also not only comes in change in PSR, it will be also there in admission, also there in retirement with the small changes. Let's go. Here change in PSR, what we will do first, if the question is asked, then what we will do first, whenever the question they ask, to adjust the capital according to the new PSR. So first what we need to do, we need to calculate total adjusted capital account by following the steps. Prepare capital account as usual, then you will make all the adjustments. After all the adjustments, what you will do, you debit minus, you will do credit. Okay, then you will get a balance over here. I will not write two balance carried out, you will get a balance over here. What you have to do, whatever the balance you got it here, okay, debit minus credit, that is we will call it as adjusted total capital. Okay, you add both the partners or three partners, how many partners are there, that many partners capital account you will adjust, plus you also adjust cash required to be bought by the partners, which is given in the question. How given in the question, cash available minus cash required to be maintained. So cash available will be given in balance sheet, and minus cash required to be, you will get what, cash required to be bought by the partners. If you add, you will get the total capital of the firm. This is called total capital of the firm. Total capital of the firm. Now what you will do, the total capital of the firm you will distribute in new ratio. Then you will make this chart where required capital means the carried on balance, where you have to write it here. Take a space over in this, you need to write to balance carried on. That balance, where from where I'll take whatever the ratio may you have changed, new ratio may whatever this capital you have distributed, that capital you're going to take it here. Then adjusted capital, where you will find it in adjusted capital in the step number 2, means in the step number 1 here, this capital here. Then if there is any surplus, please refund it, means you should write on this side. On the debit side you have to write, on the debit side you have to write to bank account. This is paying to them, if they need to borrow the cash, then you have to write by bank account and amount in that particular partner's capital account. Then whenever after you completing this, if you total on this side and this side, completely your total should match. Then this is in the case of change in PSR. What happens if there is a admission of a partner? In the admission of the partner, you get two types of capital account. One is based on existing partner's capital account, and there is also third type where generally what happens is that in the question itself they will be what is the required amount of capital. Okay, what is the required amount of capital the partner should maintain. In that case, you are not supposed to calculate adjusted capital. You have to directly take that capital which is given in the question. When in the question itself is there, the partners wants to maintain a capital of 50,000 rupees, then you have to take 50,000 as a amount instead of adjusted capital. So based on existing partners capital, what you will do, first you will calculate total capital, the same like earlier. Then what you have to do is, here small change you will make a reciprocal of their combined ratio. What is this? See, normally what happens, so what was this, if the A and B are the partners, they are sharing ratio 2:1. Now C has admitted and they're providing 1 by 4 to the C. Then what we will do? 1 minus 1 by 4 we will do. Then this 3 by 4 is for existing partners. So what we will do? We'll make adjusted capital, same like change in PSR. Only small change will make 4 by 3 we will write, so that we will get total capital of the firm. And for that we need to, we'll get adjusted total capital required plus total, we will add that cash required to be bought by the partner, then we will get total capital of the firm. Then you will distribute similarly, then you will distribute in the new ratio, then you will distribute in the new ratio, that is if 2:1:1, then you will do the same steps which we are done here. The same way we will do it. This step is similar, this step also will be same, this step also will be same. The next is based on incoming partner's share of goodwill. In this case, what we will do, if capital we asked from incoming partners is 50,000 rupees for 1/4 of the share, then you will do 50,000 into reciprocal of his share, 4 by 1 equals to 2 lakhs. That 2 lakhs you will distribute. That 2 lakhs will be considered as total adjusted capital. Next, same in the retirement and in admission, similar type will be there, only in extra. Then in the question sometimes they will ask you, they wanted to continue maintain same amount of capital, means which is given in the balance sheet, that is only they will give. Then you have to add all the capital accounts including retiring person's capital account, then you have to calculate.